What's your current assessment of the global economy and financial markets?
I would say that it's very different than consensus. Let me just give you an idea of what I think the consensus view is, and that is that the US is heading into a shallow recession that will not be very long-lived, but that the Fed, which has been the main problem for most investors for the last really half year at least, will pivot somewhere along the way, and then everything will go back to normal and onward and upward. My view is that the recession is just starting and it will be steeper and longer than the consensus thinks and may even last more than a year. Maybe it may last a couple of years. That we are in a bear market. We may have rallies along the way, you always do, but I think it will turn out to be very troublesome. I would say that somewhere along the line here, I expect the Fed to cry uncle because the economy is doing so badly and the pressures are so great from a political point of view that they will turn on the fire hose again and revert to the zero interest rate QE playbook that got us into trouble in the first place.
In previous discussions with past experts on this program, a similar topic has come up, which is it's almost sort of like be careful what you wish for with a Fed pivot. As you said, consensus was sort of short and shallow recession. The Fed pivots, and then we just go back to normal, right? We go back to the salad days of pre-2022.
Exactly.
It sounds like from what you're saying is that not only will the recession be more painful, steeper and longer, but that if we get to a point where the Fed is forced to pivot, it may likely be by really bad systemic breakages that aren't necessarily bullish moments for markets. I mean, it could be real trauma that's going on, and so the Fed pivot might not be accompanied by an immediate zoom higher in stocks, and secondly, we may be dealing with the reverberations of the shockwaves from whatever forced the Fed to pivot, for a good while. And I know in past hiking phases with the Fed, when the Fed has pivoted, it's generally taken the markets several quarters to recover. It wasn't like this instantaneous switch. And so we kind of already have history or historical precedent on our side for that view as well. Did I summarize your viewpoint there well?
I do believe that inflation is moderating. If you go to the print of last June on the CPI, which I think was 9.1% or so, and you just do it sequentially instead of year over year, you're basically flat. Inflation is maybe 2%, maybe not even that. But that doesn't mean that inflation has been cured, because there are many things may not be responsive to a slowdown in the economy. And I think labor is one of the things, very sticky. Wages, I believe, and they're a big component. Housing, rents coming down for sure, but a lot of these things are very slow moving and may take more than a 6-month campaign of hawkishness to wring out of the system. I don't think the Fed can afford a recession, because in a recession, tax receipts go down, spending probably goes up because of the reflex that you get out of politicians to help out in the form of more spending. And so that means that a budget deficit of, I don't even know what the number is, but it's probably, $1.5 trillion, which is the current run rate. It could go to twice that. And what's that going to do to the dollar? I think the best way to put it is regime change, whatever that means, but it's not a back to normal scenario.
Got it. Okay. And that's sort of where I was going. It's not a back to normal scenario. And it's interesting. You just said you don't think the Fed can afford a recession. I'm curious, John, despite that, is a recession even avoidable at this point in time? Right. I mean,
we're in a recession. I mean, you look at retail sales were down like 1%. Look at the Empire Index. I mean, those numbers are just terrible. And we're just early days here. If the Fed does what it's claiming it'll hike some more, and it's going to stay there. It's not talking about retracting any of this hawkish stance that they're committed to. If that's correct, I think the recession, to me, is very easy to see. The consensus is there's a recession, but the consensus is also that it's short and shallow and a soft landing. But some of these things don't look like a soft landing to me. A 1% decline in retail sales doesn't sound like a soft landing to me. You look at the layoffs. I mean, mean, there's so many things to talk about. This is the sort of thing, Larry Summers gave an interview the other day, and he called it that we could be in a Wile E. Coyote moment. And you remember where Wile E. Coyote was chasing Roadrunner, and all of a sudden he's in the middle of space, and the next thing is a face plant somewhere down in the canyon. I kind of think that's where we are. The damage has been done. The thought that they're just going to hang tough, the Fed being the Fed, and just stand pat while they watch inflation numbers trickle down, to me, is just not credible. Where we're going to see a quicker than expected reversal, and maybe, turning on the fire hoses all over it.
I hear you saying, John, is look, the short-term prescription you have is pain, right? Going into recession, you mentioned that we're still in a bear market. I've seen some recent quotes from you saying that you believe the bear market's far from over. So things are going to get more painful, both in the economy and in the financial markets.
Right.
You think that then's going to force the Fed to pivot, maybe even to go back down close to ZERP. I don't know if you're calling for exactly ZERP, but a pretty dramatic rate cuts from where we are right now.
Yes.
And of course, all of that is going to have an impact on precious metals. So let's talk about now, if that indeed happens as you think it's going to, how do you think the precious metals are going to respond to all that?
The price behavior of gold, we bottomed around 1,600. Here we are at 1,900 and change in the space of a couple of months. Nobody's paying any attention. Sentiment is terrible, continues to be bad. I can look at the flows that we see into our mutual fund and say that they're at best subdued. And, I'm very in touch with sentiment indicators, and I look at a lot of commentary in the financial media. And I would just say, notwithstanding this rally that we've had, there is absolutely no interest, no excitement. Long-winded answer to your question is, I don't really know, and nobody can know, what the headlines will be 6 months from now. But if you look at the price behavior of gold and also the gold mining stocks, but really gold is the key thing to look at. It's telling a story. Is it saying that we're going to have a resurgence of inflation when the Fed relents? Is it saying that there are black swans out there, maybe in the shadow banking system, which is bigger than the regulated banking system? On the geopolitical front, we don't know, but price makes news, headlines follow. I can think of enough black swans that are out there that will affect interest, which, to restate my point, is zero right now. And here we are within striking distance of an all-time high on the gold price. Nobody cares.
Why is sentiment so lackluster in gold right now? It kind of boggles my mind, because it was one of the best performing assets of 2022, right? When the S&P was down 20% and the NASDAQ was down over 30%, I think a lot of gold holders expected the conditions in 2022 would have sent gold vaulting higher, but at least it held its own, right? So, why are so many capital allocators apparently still kind of not impressed by it?
Somehow to justify it as an addition to a portfolio or a strategy, there's a lot of negativity that goes with it. There's let's say a pessimism in terms of the market or the economic outlook that one would have to subscribe to justify committing to gold in a peer situation. And I think that's the biggest thing. The fact that it performs well, and when it does perform well, is kind of quickly brushed under the rug, swept under the rug, because the story of gold is it's either inflation, could be geopolitical unrest, upset, could be economic. There's so many things that people who talk about gold, and I guess I'd plead guilty to the same issue. To bring it up, you have to talk about something negative for mainstream investors and why to have it. I think it's healthier to say gold is a hedge against systemic risk, and having some exposure to it without necessarily taking a strong point of view on the bad things that could happen makes sense. Just as you would buy insurance on a house, right, or anything like that. To answer your question, when gold does well, maybe the majority of people aren't doing well in their chosen strategies, and so they don't want to hear about it.